All right, let's get right into it. Bitcoin has just smashed through a huge psychological price level, and you can practically feel the panic rippling across the entire crypto market. Altcoins are bleeding out, sentiment has flipped on a dime, and literally everyone is asking the same exact question.
Is this it? For real? Is the bull run over and the bear market officially back in charge? That's the billion-dollar question we're going to unpack right now, looking at what this breakdown actually means and, how much further things could really go.
And the number at the very center of this whole storm? $70,000. For weeks, that was the floor. It was the key support level that everyone was watching. Now that it's collapsed, well, that's kicked off a massive wave of uncertainty. But here's the thing. This wasn't random.
To really get what's going on, we have to look at the why. This wasn't some sudden, out-of-the-blue event. Nope. This was the result of several really powerful forces all hitting the market at the exact same time.
Think of it like a chain reaction, a perfect storm. First, you've got this broad pressure from the wider economy. Then you start seeing outflows from the very ETFs that pushed the price up in the first place. And finally, you have the Bitcoin miners themselves who are under some serious stress. Let's see how these all connect.
See, it wasn't just one of these things. It was the combination that did the damage. High interest rates, because inflation is being stubborn and the Fed is being super cautious, well, that creates liquidity stress. It just makes risky assets like crypto way less attractive. At the same time, a bunch of those early ETF investors looked at their massive gains and decided, hey, time to take some profits. And then, bubbling under the surface, you have the miners. Remember, the halving just cut their revenue in half, so they're feeling this incredible pressure to sell their Bitcoin just to keep the lights on. It was the perfect storm.
Okay, so that's the backstory of how we got here. Now the big question is, what happens next? All eyes are glued to a few key price zones that could really decide the future for Bitcoin and, by extension, the entire altcoin market. This table basically lays out the entire battlefield. We've already lost that $70,000 psychological support. That's gone. Right now we're testing the $65,000 mark, which, funny enough, was major resistance not that long ago. But the real line in the sand, the final major defense for the bulls, is all the way down at $59,000. That was a huge accumulation zone back in May. And let me tell you, that $59,000 level is absolutely critical. If that breaks, the floor could drop out really, really fast. Most analysts are pointing to a potential free fall down to the $52,000 to $54,000 range. And as dramatic as that is for Bitcoin, the story gets way more intense when we look at altcoins.
This chart just perfectly illustrates a core rule of crypto. Altcoins are basically Bitcoin on steroids. They amplify its moves. If Bitcoin catches a cold, altcoins get a raging flu. And you can see it right there in the bars. As you go from Bitcoin to the major altcoins and then over to the super high-risk meme coins, that red bar just gets bigger and bigger. And the numbers, they're just brutal. While Bitcoin's drop is definitely painful, some of the more volatile assets like certain layer 2s and meme coins have been absolutely crushed. We're talking losses of 30, 40, even 60%. It's a harsh reminder of the risk here. So does this mean we're just repeating the last devastating crash?
I know, it's so easy to get that horrible feeling of déjà vu, but it is so important to understand that the market we have today is fundamentally different from the one that completely collapsed back in 2022. This is not just a repeat of history.
The difference is night and day when you put them side by side. On the left, you have 2022. That was a house of cards. It was defined by pure panic, huge scandals like FTX, and just a ridiculous amount of leverage everywhere. Now look at today, on the right. This market is built on a much stronger foundation. Real institutional involvement, spot-driven buying, and a whole lot more long-term holding.
Let's drill down a little more. Those new spot ETFs? Yeah, they've had some outflows, but big picture, they are still accumulating for the long term. We've got major institutions getting into the space, not running for the exits. On-chain data is showing that long-term holders are doing just that, holding, not panic selling. And maybe most importantly, there's no major black swan event, no giant exchanges collapsing. This is why a lot of analysts see this not as a catastrophe, but as a necessary and maybe even healthy correction.
So, with all that in mind, how are the pros handling this volatility? What are the smart, experienced people in the market actually doing right now? Let's open up the playbook. And this really says it all. The huge mindset shift is from panicking to preparing. See, fear is just a reaction, but preparation, that's a strategy. Experienced investors see this kind of volatility not as a disaster, but as a moment to be managed strategically.
So what does that strategy actually look like? Well, first, it's about systematically dollar-cost averaging into these dips, not trying to be a hero and catch the absolute bottom. Next, it's about focusing on accumulating high-quality, strong assets like Bitcoin, Ethereum, and Solana. This is a huge one. It means avoiding leverage at all costs, because that's how you get wiped out in conditions like these. And finally, it's just about staying plugged in, watching those ETF flows for clues, and keeping a close eye on the key support zones we just talked about.
And for one last dose of perspective, just look at the history books. These sharp, painful corrections, they aren't some weird anomaly in a crypto bull run. They're a feature. They're part of the process. Every single previous cycle has had drops of 20, 30, even 40% before rocketing higher. What we're seeing right now fits that pattern perfectly.
Which brings us to the ultimate question. Is what we're seeing just a painful correction that's designed to shake out the weak hands before the next massive leg up? Or is it something more? For anyone with a long-term conviction, moments just like this are often seen not as a crisis, but as the kind of opportunity that just doesn't come around very often. How you choose to see it, that could be everything.